Monday, July 1st, 2024, Maneco 64, home of alternative economics and contrarian views. We're going to look at the BIS today. They've come out with a pretty serious warning, in my opinion. They've said that confidence could evaporate very quickly, virtually overnight in the financial markets. And I'm not surprised because I've been telling you about this for many years. And of course, we have had crises in the interim, and they've always been, there's always been like the fireman that comes and stops the fire. And by firemen, I mean the governments and central banks. But this time it could be different. So we'll look at that. But before, I'd like to wish my Canadian viewers a happy 157th Canada Day today, July 1st. And before we look at the BIS, I'd like to talk a little bit very quickly about gold price seasonality. And I'm going to put this article here in the description, a link to it. And it's by Dimitri Speck, who's an analyst in the precious metals sector. And he says, gold rises seasonally from the middle of the year. As you can see, gold typically rises in the second half of the year. To be more precise, the seasonal rise begins on July 6th. Until then, the gold price had not yielded an average return for investors in recent years. When looking at the results, bear in mind that there have been good times for gold over the past 50 years, such as the current period since 2018, and bad times, such as the period from 1980 to 2001. From July 6th to the seasonal high of February 21st of the following year, gold's gains have averaged 6.96% and 11.27% for the year. This is more than double the average annual gain of 5.1% over 50 years. And I'm not trying to tell you here that you're supposed to buy gold to make a certain gain and then get out of it. What I'm trying to tell you here is that if you've been sitting on the fence or if you haven't added on to your stack, this could be a good time. This is my opinion. And with that as well, I'm going to give a shout out to, an affiliate that's been with the channel for many years. My first precious metals affiliate here in the UK, and that's Gold Investments. And if you're new to gold and silver, give them a call. Oliver Temple or Simon Temple. They'll talk to you. They will explain to you how things work. And I've been dealing with gold investments personally since 2002. The firm was run by their father, Mike Temple, and it's been around since 1981. So a highly reputable dealer. They were even delivering people's gold and silver when they're buying it during lockdown in the UK. Yes, Oliver and Simon drove to people's homes to deliver it because the post and everything else halted. So that's how reliable they are. I highly recommend you check them out. There are some links below in the description, and you'll see how you can get in touch with them. And according to Dimitri Speck, the best day to buy gold is on July 6th. This year, though, or in the run-up to July 6th. So this could be the week here. And I'm not saying either that you shouldn't buy gold any other time, because I think that's the way it should be done, good dollar cost averaging. But this is probably not a bad time. And of course, this is my opinion. So let's move to the BIS now, Bank for International Settlements. And I'm not going to go behind their history because they have a very shadowy history. And if you do want to go through their history, think about getting this book, Tower of Basel, The Shadowy History of the Secret Bank That Runs the World. And I think they do. Adam Libor is right. But anyway, I've been warning my viewers since late 2015 that there would be one day that there would be a revulsion to all the debt that had been created back until 2015. And of course, the debt has mushroomed even more because every time there's a big crisis, the governments step in, they borrow more, the central banks step in, they print more reserves and buy the debt and keep everything going. But now I think they're at the end of the road because the currencies are starting to debase. They never thought that by printing money that prices would start rising. Consumer prices, they thought it was like they could do it forever and things would be okay. And I think if there's another crisis like the BIS is warning of, it will be very difficult for governments and central banks to step in. And if they do step in, look out below fiat currencies, and that includes the dollar. So the interesting thing about this warning, we're going to go through it right now, is that things seem very calm right now under the surface. Bond markets are under control. Yields aren't really spiking that much. They're pretty steady, and they have been for the last year or so. But I have a feeling that things could start heating up by the end of the summer and into September. And why is that? Well, from my historical studies about markets, currencies, crises tend to happen in the autumn or fall equinox, which is around September 20th, 21st. I warned back in July, August of 2022 that we could have a sovereign debt crisis in the UK in September, around the time of the equinox back then. I think it was the 21st. And lo and behold, we did have a crisis, the gilt crisis. And now I find it interesting that the BIS is warning about this, and we're just entering, July. There's not much time left until September. So let's quickly go through this. It came out yesterday. Bloomberg reported on it. It says, beware market's sudden wrath over debt. There you go, debt. That's the problem. BIS tells governments. Basel officials warn that confidence could quickly crumble. Things look sustainable until suddenly they no longer do. They're right. I mean, look at what happened to the British pound in September of 2022, and gilt prices collapsed. Gilt yields spiked. That's what happens when bond prices drop. The yields go up, interest rates go up, and it's a mess, and it affects the whole system, as you'll see. Indebted countries are vulnerable to a precipitous loss of confidence, even though that risk is barely acknowledged in bond markets, the Bank for International Settlements warned. The Basel-based institution said in its annual economic report released on Sunday that countries whose bloated fiscal positions are further stretched by higher interest rates should prioritize fiscal repair. Well, don't hold your breath for that. Fiscal repair, not a chance in hell, I would say. In the UK, we're going to get a Labour government. Do you think they're going to impose austerity? No way. In the US, do you think if Trump wins, he's going to raise taxes, cut spending? No way, because he was running 5% of GDP budget deficit. So yeah, I'm concerned. Well, I'm not really concerned because I don't have government bonds. I don't have much in the system. But if you do, you should be, in my opinion. Let's continue. Claudio Borio, head of the BIS's Monetary and Economic Department, said they must act with urgency. That's what he said, with urgency. That's not me saying it. We know from experience that things look sustainable until suddenly they no longer do, he told reporters. That is how markets work. Well, at least he knows how they work. Some bureaucrats, politicians, and even central bankers or people like Janet Yellen have no clue about how markets work, but Mr. Borio does. While the need to fix public finances has been a recurring theme for the BIS, the remarks coincide with heightened scrutiny on indebted economies. Worries about France this month prompted investors to demand the highest premium on its bonds since 2012. Well, I can tell you that French yields today are pretty much under control, but we need to keep an eye on it anyway. The Basel officials didn't specify any country in particular, but they did feature a chart looking at the debt and market pricing of some of the world's biggest borrowers, including Japan, Italy, the US, France, Spain, and the UK. In order to stabilize finances, advanced economies can this year run deficits no larger than 1% of GDP, down from 1.6 last year, said the BIS. Not sure what countries they're looking at there. Maybe some of the European countries are keeping a tight rein on their spending, but there's no chance that that's going to happen here in the UK or in the US. Think of more 7% of GDP deficits. That's a fraction of the current US deficit, which the IMF described last week as much too large. Though financial markets pricing points to only a small likelihood of public finance stress at present, confidence could quickly crumble if economic momentum weakens and an urgent need for public spending arises on both structural and cyclical fronts. Well, that means, if there's a crisis, things could get out of hand. That's what they mean by that. Or a recession, or one of their engineered crises, right? Like we had in 2020. The BIS said government bond markets would be hit first. The strains could spread more broadly. Why would government bond markets be hit first? Well, because it's at the base of the whole financial system. It provides the liquidity. It sets the rate of interest for the rest of the financial system. And that's why it's so important. And that's why I keep an eye on government bond yields. And that's what I'm going to keep doing the next few months. And warn you if things are getting worse. Inflation is subsiding, however, BIS officials acknowledged. The world is currently set for a smooth landing, General Manager Agustin Karsten said. Well, I'm not too sure about that, actually, because if you look at this chart here, global shipping freight costs starting to rise again. And there's been talk about the inflationary waves of the 70s. Some people argue, like Tavi Costa, that we could be in the first or second inning of an inflationary wave. Services still pose a risk to that outlook, with prices in the area out of step with pre-pandemic trends, the report said. In addition, increases in the cost of commodities due to geopolitical tensions could reignite inflation, or maybe too much money printing. That's what inflation is. I don't agree with that either. Given these pressure points, officials highlighted that central banks should be cautious about cutting rates too soon. Well, some of them have already started cutting rates. I know the Fed and the Bank of England haven't yet, but the ECB is, they've announced that they're going to keep cutting. They've cut already. The Swiss National Bank has cut. that could prove costly to their reputations. What reputations? If such policy needs to be reversed amid a flare-up of inflation again, the report said. Policymakers already did their fair share to contribute to that problem, the BIS suggested, repeating its accusation that with the benefit of hindsight, pandemic-era stimulus probably raised the risks of second-round effects. While central banks shouldn't ease too soon, governments also have to play a part with loose fiscal policy, officials said. Instead, they should widen tax bases and deliver structural reforms to meet future challenges, including demographic shifts and climate change. I really think central banks and governments in the rich countries, if you want to call it that, are totally cornered. And why? Well, the fiscal situation is really difficult because governments have become so big. Government spending has become so big that if they implement these policies the BIS is talking about, it's going to be politically unpalatable, and especially if Europe shifts to the right. They're not going to try to implement tough fiscal austerity because they want to stay in power. And the same thing goes for labor. They're not going to do austerity for labor here in the UK, that is. So here we go. This is what Mr. Borio said. Our main message is that central banks alone cannot deliver a durable increase in economic growth and prosperity. Of course they can't, because central banks, they print money out of thin air. They've got no wealth. It's you. It's the private sector and you that create wealth. Laying the foundation for a brighter economic future also requires actions from other policymakers, especially governments. So I think what they're doing here, because central banks are supposed to be independent, and they're not supposed to interfere in fiscal policy. So what the BIS is doing here is intervening or like giving their opinion, and that kind of absolves the member banks of the BIS. It absolves the Fed, J. Powell, Bank of England, ECB from telling governments what to do. And I don't think the governments are going to listen. They're not going to do anything. So that's why I think things could get interesting. We're going to keep an eye on bond yields. For example, this morning, I'm looking here at the U.S. Treasury yield curve. And U.S. Treasuries, they trade almost 24/7 all around the world, the cash market. So the 10-year yield right now is up 5 basis points at 440. Here in the UK, gilt yields are up as well. The 2-year gilt yield is up 4 basis points, 427. The 10-year is also up 7. So with that, I'm going to wish you all a very good day. Take care. Bye.